What happens when two of the world's biggest economies clash in a full-scale trade war? The consequences might affect your job, your savings, and the price of your groceries. Welcome to TVAI, where global events meet sharp analysis. In a dramatic and unprecedented escalation of economic tensions, the government of the People's Republic of China has announced a sweeping 34% tariff on all goods imported from the United States, marking a direct and formidable retaliation against the recent U.S. tariff expansion declared by President Donald Trump earlier this week. The news, delivered through China's Ministry of Commerce in a nationally televised statement, has sent shockwaves throughout global financial markets. It also signals a new, possibly long-term phase of economic conflict between Washington and Beijing. As of this recording, stock indices in Asia and Europe have plunged, while U.S. markets are bracing for another volatile week. Let's break down what this move means, why it happened, and how it could ripple across the world, including your own household. President Trump, in a speech on April 2nd, unveiled what he called a reciprocal trade reset. Under the new policy, nearly all imports into the United States would face a base tariff of 10%, with steeper rates targeting around 60 countries accused of engaging in unfair trade practices. The most severe penalties were reserved for China, India, Mexico, and Vietnam. According to the Trump administration, these measures are meant to shrink the U.S. trade deficit, bolster domestic manufacturing, and eliminate what it views as predatory pricing and intellectual property theft by foreign competitors. In response, Beijing acted swiftly. The 34% blanket tariff on U.S. goods, effective next Monday, is not just symbolic. It is surgical. American soybeans, automobiles, pharmaceuticals, and even tech components are now subject to steep import duties in China. These are industries that heavily rely on the Chinese market and are deeply entrenched in the U.S. economy. For U.S. farmers, especially in the Midwest, this is a nightmare scenario. Soybeans, pork, corn, and wheat were already facing a difficult market due to shifting global demand and climate-related disruptions. Now, China's tariff wall could cut off access to their largest overseas buyer. In Michigan and Ohio, automakers are sounding the alarm. General Motors and Ford, which export large volumes of vehicles and parts to China, anticipate sharp declines in quarterly earnings. Layoffs are not off the table. Tech companies, too, are feeling the heat. Semiconductor giants like Qualcomm and Intel have long relied on Chinese assembly lines and buyers. The new tariffs may force them to reroute supply chains or absorb significant losses. But it's not just American industries at risk. Chinese manufacturers who depend on U.S. components are also caught in the crossfire. Industries like electric vehicles, smartphones, and robotics could face increased costs, delays, and potential shortages. The European Union has expressed serious concern over the tit-for-tat tariffs, urging both parties to seek resolution through the World Trade Organization. However, Brussels also sees an opportunity. With U.S. and Chinese trade under strain, European producers may step in to fill the vacuum, especially in sectors like agriculture, luxury goods, and industrial machinery. India, Brazil, and several Southeast Asian nations are watching closely. Some have signaled interest in expanding trade ties with China to replace American suppliers. Others are worried about collateral damage, particularly in the form of currency instability and shifting capital flows. Meanwhile, Russia has openly backed China's response, framing it as justified resistance to Western economic imperialism. Back home in the U.S., political reactions are deeply polarized. Supporters of the tariffs hail them as a long overdue correction to decades of economic imbalance. "This is how you fight for the American worker," said Senator Josh Hawley of Missouri. On the other side, critics argue that the administration is playing a dangerous game with the global economy. Senate Majority Leader Chuck Schumer warned, this could ignite a recession. Business lobbies, including the Chamber of Commerce and the National Retail Federation, are urging the White House to reconsider. They warn that rising prices, supply chain chaos, and shrinking exports could drag the U.S. economy into negative growth. The current standoff echoes past trade wars, notably the Smoot-Hawley Tariff Act of 1930, widely blamed for worsening the Great Depression. More recently, in 2018 to 2019, the Trump administration and China were embroiled in a protracted tariff battle that led to billions in lost revenue and market disruption. But this time, the stakes are arguably higher. Both economies are larger, more intertwined, and more fragile. The COVID-19 pandemic has already exposed vulnerabilities in supply chains. A new trade war could exacerbate inflation, stifle innovation, and further strain diplomatic relations. Experts predict that the situation could escalate further if neither side backs down. China has hinted at additional measures, including currency devaluation, restrictions on U.S. tech firms, and potential sanctions against American companies operating in mainland China. The U.S., meanwhile, is considering targeting Chinese financial institutions and imposing new export controls on sensitive technologies. Investors are advised to brace for prolonged volatility. The dollar is fluctuating, commodities are unstable, and safe haven assets like gold are surging. Ultimately, the impact of these tariffs will be felt in everyday life. Prices for electronics, cars, groceries, and even medication could rise. Job losses in export-heavy sectors may trigger broader economic consequences. For the average American family, this means tightening household budgets, delaying major purchases, and navigating a more uncertain financial future. As the world's two largest economies dig in for a protracted showdown, the ripple effects will touch every corner of the globe. Will diplomacy prevail? Or are we entering a new era of economic nationalism? We'll keep tracking every development for you. Subscribe to TVAI for real-time updates, expert analysis, and full coverage of the global power plays shaping our world.